Ebang, yet another crypto China hustle absconding with US investor cash. Ebang is a China-based crypto company that has raised $374 million from US investors in four offerings since going public in June 2020. While the company represented that it would use the majority of its numerous capital proceeds to develop its business operations, our research discovered it instead directed much of the cash out of the company through a series of opaque deals with insiders and questionable counterparties. For example, the company directed $103 million, representing $11 million more than its entire IPO proceeds, into bond purchases linked to its U.S. underwriter AMTD, which has a track record including A. Fraud and self-dealing allegations levied against it by one of the largest private equity firms in China, and B. Listings that have subsequently imploded. AMTD entered into similar bond transactions with another company it recently took public in January 2020 called Molecular Data. That company is down 70% since then, has seen six board members and its co-founder resign, and had its auditor decline to stand for re-election. In November 2020, Ebang tapped the market for its first secondary offering, announcing a $21 million raise. It claimed proceeds would go primarily for development. Around the same time, the company directed $21 million to repay related party loans to Ebang chairman and CEO Dong He's relative. Before going public on Nasdaq in June of 2020, Ebang twice applied for a listing on the Hong Kong Stock Exchange, attempting to raise as much as $1 billion. Multiple media outlets reported that Ebang's Hong Kong IPO plans were suspended following involvement in an alleged sales inflation scheme with a company called Yindu. Yindu was a massive Chinese peer-to-peer online lending scheme that defaulted on its 20,000 retail investors in 2018, and $655 million vanishing into thin air. Its ultimate beneficial owner fled the country, and Chinese prosecutors have been pursuing a criminal case against other suspects associated with Yindu. Ebang claims to be a leading Bitcoin mining machine producer, yet our research indicates this extraordinary claim is backed by no evidence. Ebang released its final miner in May 2016 and has since seen its sales dwindle to near zero, delivering only 6,000 total miners in 1H20. With its mining machine business failing, Ebang pivoted the story to a cryptocurrency exchange launch called Ebonex. Announcements about the exchange added as much as $922 million market capitalization to Ebang. We found that Ebang's exchange appears to be purchased from a white label crypto exchange provider called Blue Helix that offers out of the box exchanges for as little as no money up front. Ebonex reports what appears to be fictitious volumes, despite just launching and having virtually no online presence. Ebonex volume data implies it is one of the largest spot exchanges in the world. Its trading metrics are absent from crypto exchange trackers such as FTX and Coin Market Cap. Ebang is yet another cautionary tale for inexperienced retail investors enthused by anything crypto-related. As is so common with other ridiculous China-based schemes, the company will likely keep selling shares as long as investors are willing to keep buying them. We think this is a clear one-way street and capital isn't coming back. Initial disclosure. After extensive research, we have taken a short position in shares of Ebang International Holdings Incorporated. This report represents our opinion, and we encourage every reader to do their own due diligence. Please see our full disclaimer at the bottom of the report. Background: Ebang is simply the latest chapter in the China hustle, disguised as a Bitcoin mining play. Stocks tied to blockchain technology have been on the run over the last few months, swept up in Bitcoin's resurgence. Ebang has been able to ride this wave, going public in June 2020, largely based on claims of being a leading global producer of Bitcoin mining machines. Since going public, the company has announced a series of preliminary initiatives, such as setting up various international entities 1, 2, 3, and 4, and launching Bitcoin, Litecoin, and Dogecoin mining businesses, and launching a new crypto exchange. These preliminary achievements have been enough for investors to award the company a market cap as high as $1.5 billion and have paved the way for a slew of follow-on equity offerings at prices ranging from $5 to $6.10 per unit, including warrants. In total, the company has raised $374 million from investors in four offerings over the past 9 months, pages 4, 5, and page 83. Investors in Ebang likely think they are getting in on the ground floor of an expansive, multi-pronged cryptocurrency technology enterprise. But our research found out that while the company represented that it would use the majority of its numerous capital proceeds to develop its business operations, it instead simply directed cash out of the company through a series of opaque deals with entities linked to its chairman, CEO, and its underwriter. For example, the company directed $103 million, representing $11 million more than its entire IPO proceeds, into bond purchases linked to its underwriter, AMTD, which has a track record of A. fraud and self-dealing allegations levied against it by one of the largest private equity firms in China, and B. listings that have subsequently imploded. The company then announced a $21 million secondary offering, claiming it would use the funds to expand its operations. However, we found that the company directed $21 million to a relative of its chairman CEO around the same time. These actions shouldn't surprise investors familiar with Ebang's history and abysmal reputation in China. Prior to going public in the US, Ebang was accused of using cash embezzled from a fraudulent lending scheme in order to inflate its sales in the run-up to its planned Hong Kong IPO. The company ultimately failed to list in Hong Kong twice, owing to customer lawsuits, police investigations relating to embezzlement and other fraud allegations, and public scrutiny over its conduct. Following these failures, Ebang was finally brought public in the US by underwriter AMTD with the track record mentioned above. Rather than an exciting opportunity, we believe Ebang is simply yet another China hustle, the latest in a long list of companies blatantly absconding with US capital, which winds up taking a one-way trip to China as a result of misrepresentations to US investors. Background: Ebang's crypto mining hardware business and recently opened crypto exchange. Ebang was founded by its current chairman and CEO, Dong He, in 2010. The company initially focused on selling communications network access equipment until around 2014, when it transitioned into the blockchain industry. Page 10. Ebang launched its first application-specific integrated circuit, ASIC, mining machine called the EBIT E9 Plus in December of 2016. Page 119. ASIC machines are specifically built to mine certain cryptocurrencies like Bitcoin, Dash, Litecoin, and Zcash. Since then, the company has launched 12 new machine variations, with the most recent being the machine seen below. In addition to crypto mining hardware, the company recently launched a crypto exchange and began mining Bitcoin on its own books in 2021. Part 1. Before its Nasdaq listing, Ebang's fraud allegations led to two failed Hong Kong IPO attempts. Before going public on Nasdaq in June of 2020, Ebang twice applied for a listing on the Hong Kong Stock Exchange, reportedly attempting to raise as much as $1 billion. Both times, the applications lapsed without approval. Ebang Hong Kong's IPO was suspended following allegations of sales inflation and involvement in the Ponzi scheme. Multiple media outlets reported that Ebang's Hong Kong IPO plans were suspended following involvement in an alleged sales inflation scheme involving a company called Yindu. Yindu was a Chinese peer-to-peer online lending platform. According to media reports, Yindu's platform offered short-term investments, usually with a one-year term, promising a 13% return. Below is a screenshot of its website from February 24, 2018. Advertising 3% returns for 376 days. In July 2018, Yindu reportedly defaulted on its 20,000 retail investors, failing to pay back amounts totaling as much as 4.4 billion renminbi, or $676 million. Its ultimate beneficial owner then fled the country. Chinese prosecutors have been pursuing the case against other suspects associated with Yindu. Prior to its implosion, Yindu's principals allegedly engaged in wash sales transactions with Ebang ahead of its IPO in order to create the false appearance of sales. Local media reported that the spouse of Yindu's CFO, Kui Hong Wei, transferred 520 million renminbi, or 79.9 million US dollars, to Ebang between December 2017 and February 2018. Ebang then transferred 380 million renminbi, or 58.4 million US dollars, back to Kui Hong Wei several months later. Between March and April 2018, it is unclear when the transactions began, but Yindu's wife was listed on Ebang's IPO prospectus, published in December 2018, as a customer who generated 12.1% of Ebang's 2017 sales revenue, page 152.